economist and specialist in oil and energy affairs, Mr. Amer Shobaki, to discuss the latest developments in the oil market and the impact of the trade war on it. Welcome, Mr. Shobaki, to the Economic News Bulletin. Now, to what extent are the rising U.S. China tariffs impacting global economic growth and oil demand in specific?
Greetings to you all, and I think that this region that has the biggest impact on the market, the tariffs and the trade war between China and the U.S. Today, the market is still evaluate and weigh such an economic war impact on oil. The oil has lost $11 per barrel, 15%. The range in about $64 per barrel. All this mainly because of the concern of the oil demand that might go down in case of the decrease of the economic growth due to the tariffs and the trade war. In addition, OPEC Plus announced about the offer surplus in the market in around 411,000 barrels per day. All this region led OPEC to decrease its outlook to the growth of the demand from 1 million to 450,000 barrels per day to 1 million to 300 of the demand growth per day. So I think that the decrease will be more due to the projections of the continuation of the trade war between U.S. and China in particular.
Well, sir, could the continued trade tensions, derail the post-pandemic economic recovery in key markets? I mean, the oil market, how vulnerable is it to this tariff war? Is this a healthy phenomenon?
I think that the world is heading to an economic deterioration might exceed what we've seen over the COVID-19 pandemic. We're talking about the total trade exchange around $17 billion between China and U.S., let alone the tariff imposed in the car or the automotive and the steel imported to USA. And I think this suspension throughout the 3 months would constitute an uncertainty state in the market, not only in the demand growth, but also for the economic growth and maybe the inflammatory recession that would come out as a result of the tariff war along with the trade war between China and U.S.
Other than the tariff war, what other key factors that led OPEC to revise down its 2025 oil demand forecast? How significant is this 150,000 barrels in the broad context of global oil consumption?
Yes, this factor certainly because of the trade war between China and U.S. along with the concern of the decrease of demand for the most oil consumers such as U.S. along with the biggest oil import such as China. This is the biggest trade war in the world that would really constitute 40% of the world economy. That would affect at larger scale of the most oil or energy sources such as the oil. I think also that the production war that we are witnessing within OPEC that will to the or call upon to the increase of the production for those countries that produce more than their shares. So if they have agreed upon on the Iranian nuclear programs and allowed Iran to decrease its production of the oil, so the price would go down to less than 60 or maybe 55 to the Brent per oil. If approaching of the production of Iran to the current prices that came aligned despite with the productions of Iran to the oil and selling around 1,800,000 of the oil production in the market.
Mr. Shobaki, on the other hand, how do you explain Goldman Sachs' bearish oil price outlook through 2026? Are the projected large oil surpluses realistic?
I think the Goldman Sachs outlook came very optimistic to the rate of Brent price around $59 to $62 per barrel. I think it's around $64 in this year. It is a very optimistic outlook, and I think the prices should be decreased compared these rates if we expected the continuation of the war, the trade war between the U.S. and China, along with the protectionism policy of Donald Trump.
From Amen, that was the economist and specialist in oil and energy affairs, Mr. Amer Shobaki. Thank you very much, sir, for your insights.